Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening.
We have to be very careful about opening the gate, as the horse may simply bolt again.
The RBI governor remains cautious on inflation as the Monetary Policy Committee leaves key rates unchanged for the 10th time in a row, but changes its policy stance to neutral, raising hopes of a possible rate cut in December.
It is observed that some NBFCs are aggressively pursuing growth without building up sustainable business practices and risk management frameworks.
The RBI governor warns non-banking financial companies once again, say few NBFCs are aggressively chasing growth without building sustainable business practices, warns of action if companies fail to self-correct. The Sensex and the Nifty end flat after last hour sell-off. The Nifty falls below 25,000. Mid-caps outperform. The rupee remains on a tight leash against the dollar. Israel expands its ground operation in Lebanon, claims to have struck 230 Hezbollah and Hamas targets. Netanyahu warns the Lebanese people could face destruction and suffering like the Palestinians in Gaza if they don't free the country from Hezbollah. UN Secretary General warns that Gaza is in a death spiral. Hyundai India unveils its 28,000 crore rupee initial public offer, which will open for subscription on the 15th of October. The issue values the company at 1.5 lakh crore rupees, which is largely in line with its peers. If successful, this will be India's largest IPO yet.
Only reason we would want an IPO is because we are at the forefront of this, right?
I would say 50-50, more leaning towards no IPO today.
I would lean heavily towards no IPO.
The trio Zerodha divided on a potential IPO after reporting a record profit of 4,700 crore rupees in FY24. Also admit the best could be behind the broking business after seminal regulatory changes kick in. That's an exclusive. The Road Transport Ministry is likely to seek an explanation from Ola Electric on customer complaints. The Central Consumer Protection Authority has already issued a show-cause notice to the company. Well, the top story this evening, the Reserve Bank of India has kept its key interest rate unchanged at 6.5% for the 10th time in a row. However, this time the decision was not unanimous, as new MPC member Nagesh Kumar voted in favour of a rate cut. All MPC members decided to change the stance from withdrawal of accommodation to neutral, raising hopes of a possible rate cut in December. Now let's talk about the GDP forecast for FY25. It's been retained at 7.2%. RBI Governor Shaktikanta Das has said he expects India's growth story to remain intact. However, the growth forecast for the second quarter has been lowered to 7%. On inflation, the MPC has retained its FY25 forecast at 4.5%. Governor Das remained cautious and highlighted the rise in global food and metal prices, along with the volatility in crude prices as potential upside risks. Governor Das has also issued a warning to NBFCs. He said that few NBFCs are aggressively chasing growth without building sustainable business practices, and this could be counterproductive. He also warned of action if companies fail to self-correct.
While the overall NBFC sector remains healthy, I have a few messages to certain outliers. First, it is observed that some NBFCs are aggressively pursuing growth without building up sustainable business practices and risk management frameworks, which should be commensurate with the scale and complexity of their portfolio. An imprudent growth at any cost approach would be counterproductive for their own health. It is important that NBFCs, including MFIs and housing finance companies, follow sustainable business goals, a compliance-first culture, a strong risk management framework, a strict adherence to fair practices code, and a sincere approach to customer grievances. The Reserve Bank is closely monitoring these areas and will not hesitate to take appropriate action if necessary. Self-correction by NBFCs would, however, be the desired option.
Well, that's the RBI Governor. And Lata is here now with more on the monetary policy, as well as that warning from the Governor to NBFCs. Lata, the policy in line with what the markets were anticipating. A change in stance now leading to hopes of a rate cut perhaps as early as December. But more importantly, that reiteration in terms of the cautionary message that the governor has sent out to NBFCs this time specifically.
Well, those are the three key takeaways for me. First is it's such a masterly act in going neutral but not sounding too dovish. It's a little difficult, you know, once you change the stance, the markets can run away with their exuberance. But the quotes caveated that dovishness so beautifully. Look at the quotes that he said. Even as there is greater confidence in navigating the last mile of disinflation, significant risks, I repeat, significant risks to inflation persist. And then another quote, we need to closely monitor the evolving conditions for further confirmation of disinflationary impulses, saying that disinflation is not good enough. So that's, I think, excellent, not allowing the markets to be exuberant. And we saw that play out in the stock market, not too much exuberance. Again, next cut is that in December. It's usually logical. You change the stance this quarter, next policy, you will cut rates. He has hedged himself again very well over there. The MPC is unambiguously focused on getting inflation, aligning inflation to target. The other words are the same as the previous stance. What he has added is the word unambiguously, and it was repeated like 3 times. So in all 4 times, we got to hear the word unambiguously, something absent in previous policies, driving home the point that we may not cut as early as December. In fact, to buttress that point, Deputy Governor Patra in the Q&A said that we want to cross the current hump of inflation before we consider the next step. Now, what is this current hump? Actually, the September inflation number will come out next week, October 13th, and October 14th, and that's expected to be 5.2%. You know, the NPC's target is 4%. And the October inflation number, which will come out next month, is expected to be again 5%. Now, those are the 2 numbers that will be available to the MPC when they go to the policy on December 6th. With that 2 5% readings behind them, they have a very good chance to say, let's wait to see it's getting back to 4%. So my sense is that December is more likely not than, expect a rate cut. No rate cut would be the call going by these statements. And finally, reading the Riot Act to NBFCs, MFIs, HFCs. Now, the important point is that the words that they used, RBI will not hesitate to take appropriate action, though we think self-correction is the best. Now, that's a big threat. So another round of raising risk weights if the number of loans per person doesn't go down, or the number of risky loans or sharp practices don't go down. That warning has come out very clearly. So those who own NBFC stocks also did not celebrate much today. There is something to celebrate because the cost of money goes down for NBFCs. They borrow from the market. But people didn't celebrate much because this hidden threat came in. And finally, a point which really I took away is he's very confident on growth. That 7.2% was argued with such vehemence that now I'm inclined to be a little more optimistic about growth.
All right, Lata, many thanks for joining us. Those are the highlights there of what the MPC has delivered in its policy today. Let's talk about the stock markets. They did perk up soon after the RBI status quo policy, but then we saw a sell-off in the last hour, which wiped out the gains. The Sensex and the Nifty ending with marginal losses. So the Sensex dropped about 167 points. The Nifty dropped about 31 at close, coming off, as we pointed out, significantly off the intraday highs. The Nifty mid-cap continued to trade higher and close about 1% higher. The Nifty Bank really did nothing at close. Well, that was the market action for us. Of course, the global picture, the stimulus rally in China running out of steam with the Shanghai Composite Index losing over 6% today, that is. And on the other hand, Japan's Nikkei ended with gains of almost 1%. And of course, our markets closing in the red. But tensions in West Asia continue to boil over. Israel has stepped up its offensive in northern Gaza. Israeli forces have carried out intense bombardment in the region, killing at least 17 people in the last 24 hours. Now, the UN Agency for Palestinian Refugees has said that Israeli forces have trapped 4 lakh people in northern Gaza, despite urging them to evacuate the region immediately. Israel has also expanded its ground operations in Lebanon and claimed to have struck 230 Hezbollah and Hamas targets. Israeli Prime Minister Netanyahu addressed Lebanese citizens, urging them to remove Hezbollah from the country so that they can avoid destruction and suffering like Gaza. He also branded the country as a place of war. Meanwhile, an airstrike was also carried out in Syria's Damascus by Israel. The attack hit a residential building, killing 7 people. The UN Secretary General spoke to the media a day after the October 7th anniversary, condemning the war and insisted on hostages being freed.
You have an opportunity that hasn't existed in decades. An opportunity to take care of the future of your children and grandchildren. You have an opportunity to save Lebanon before it falls into the abyss of a long war that will lead to destruction and suffering like we see in Gaza. It doesn't have to be that way. Each of you can take a step for your future, even a small step. You can make a difference.
Ordering civilians to evacuate does not keep them safe if they have no safe place to go and no shelter, food, medicine or water. And no place is safe in Gaza and no one is safe. International law is unambiguous. Civilians everywhere must be respected and protected, and their essential needs must be met, including through humanitarian assistance. All hostages must be released. And I strongly condemn all violations of international humanitarian law in Gaza.
Well, that's the UN Secretary General. Time for us to head into a short break. But up next, Hyundai India unveils its 28,000 crore rupee initial public offer, which will open for subscription on the 15th of October. That and more when we return. Stay tuned. Zareen Daruwala, Standard Chartered CEO for India and South Asia, will retire on the 1st of April 2025. The company said it will announce a successor in due course. Zareen joined the British multinational bank in 2016 as its India CEO. Now, shares of SpiceJet surging after the amicable settlement of a $132 million dispute with aircraft leasing firm Babcock & Brown Aircraft Management. The airline said the dispute has been resolved for $22.5 million. That's 1/6 of the original amount. Remember, Babcock & Brown represent 3 of the budget carriers' lessors. SpiceJet has raised 3,000 crore rupees via QIP just last month, and it is now paying some of its outstanding dues. Shares of Tata Tech surging after the company announced a joint venture with the BMW Group. The 50-50 JV will be called BMW TechWorks India, and it will focus on developing software-defined vehicle tech for the automaker's global operations. The new entity will begin operations with 100 employees across Pune, Bengaluru and Chennai. Take a look.
The one thing I would point out is that the joint venture is separate and discrete from Tata Technologies. So there will be no sharing of IP and skills and capability. What we will develop in the JV will be proprietary to BMW. But I think partnering with a great organization, a best-in-class organization, by association, helps you get better. And that's what we're expecting to accrue from this collaboration.
The strike by Samsung India workers at the Tamil Nadu plant has entered the 2nd month. A settlement between the union and senior management had been reached. However, protests continue as workers demand that their newly formed union be recognized, and that's been rejected by the company. The Tamil Nadu police detained union leaders and workers at the protest site earlier today. Reports say the police has also arrested at least 10 members of the union in a midnight raid. However, State Finance Minister clarified that the arrested workers have now been released. Hyundai India's 28,000 crore rupee initial public offer will open for subscription on the 15th of October. If successful, this will be the largest IPO yet, ahead of LIC and Paytm. Hyundai India is valuing the business at 1.5 lakh crore rupees, which is largely in line with its peers. The company revealed its price band today, and Vinny is standing by with all the details. Vinny, fill us in on Hyundai's proposed IPO.
Let's look at the IPO details that we are watching out for. The price band amount is finally there. So we are looking at a price band of 1,865 rupees to 1,960 rupees per share, which turns out to be an issue size of 27,870 crore rupees. This is an OFS that we are watching out for, 14.2 crore shares, which represents around 17.5% stake, where the promoter, HMC, that's Hyundai Motor Corporation, will be selling the 17.5% stake. This is an implied market cap that we are watching out for the company at 1.5 lakh crores to 1.59 lakh crore rupees. Let's move on and talk about how Hyundai Motor has been demonstrating strong financial growth over the years. FY21 to FY24, the CAGR growth for revenue has been 19.2%, and for an EBITDA, it's an even impressive number, 27.5% over the same period. This surely shows the efficient capacity that they have as well as scale that they can grow at going forward. Now, the company's EBITDA margin, that has also expanded approximately more than actually 100 basis points over the last couple of years from FY22 to FY24. Like you can see, FY22, 11.6% was the EBITDA margin, while it in FY24, it was at 13.1. Q1 of FY25, that's what they are maintaining as well. 13.5% is what they are around. Entry into EV, they made the entry in 2019 with the launch of Kona EV, and this is despite being a late entrant, they managed to capture some of the market share, currently holding around 1.1% market share. And this is in an industry and segment which they want to focus on, and this is a rapidly growing segment. Compared to Tata Motors, obviously it's much lower because Tata Motors is dominating over there with 65.3%. Let's move on, talk about the passenger vehicles. What is that looking like? Strong contender there, right? Q1 FY25, Hyundai captured around 14.6% market share, and key competitors obviously coming in from Maruti Suzuki, leading there with 41.1%, followed by Tata Motors and M&M also in the race there. Financially stacking up quite well against its peers as well. So looking at it in terms of revenue, 69,829 crores, though Maruti as well as M&M have seen a higher revenue. This is an FY24 number as well as the EBITDA number that you can see stacking up over here. Quite interesting in terms of the growth that they've been managing over the last few years. Pulling out the margin numbers, that's an interesting number versus its peers. Hyundai has 13.1% EBITDA margin, Maruti 13%, and the highest margin comes in from M&M, obviously in a large chunk from M&M is 15%. So margins almost in line with what we're watching out for the peers. However, Hyundai is still growing at a rapid pace. Expectations are to grow at 20% CAGR growth going forward. And let's not forget valuations, right? Quite attractive over there when you're looking at it from a one-year forward period as well. FY26 period, 18 times, assuming that Hyundai grows at a 20% CAGR growth, stacking up well cheaper than Maruti and M&M going forward.
All right, Vinny, many thanks. That's Hyundai for you. And you can catch the details of the proposed Hyundai India IPO at 6 p.m. right here on CNBC TV 18. We will be in conversation with the Hyundai top brass. And speaking of companies going public, or at least in a dilemma on whether they should or should not, the triad Zerodha divided on a potential IPO. This after reporting a record profit of 4,700 crore rupees in FY24. In an exclusive conversation with me, CEO Nitin Kamath said that the firm will opt for an IPO if the regulator makes it mandatory. The CFO, Nikhil Kamath, is 50-50 on a potential listing, and the Chief Technology Officer, Kailash Nad, is opposed to going public altogether. Take a look.
Let me put that question to all three of you, because that is the number one question that everybody's asking. Right. Why don't you IPO in a market where everybody's IPOing at this point in time? Is it about the fact that you don't have line of sight, clear line of sight, as far as revenue predictability is concerned, especially in the current regulatory environment? Two, is it about the fact that, look, you don't have any exits to offer because you didn't want to carry that baggage with you? And three, your freedom, the ability to want to do the things that you want to do without having to answer questions, which is it? And is it a no for now, or is it off the table, for the long term?
I mean, the only reason we would want to IPO is because we are at the forefront of this, right? As in, we are a stockbroker, and we ask every company to create wealth.
Exactly.
So that's the only reason. I mean, I don't think, at least for now, there is any other reason to go IPO, right? As in, if ever we decide in the next, by the time, the plan as of now is we build a bunch of businesses, build some diversification, and then maybe once there is predictability, then we can decide.
If you had to vote, would you vote for an IPO in the near future or not?
I would be conflicted because the pros and cons, I think, are very close to being equal.
So it's what, 50-50 for you?
I would say 50-50, more leaning towards no IPO today.
More leaning towards no IPO, Kailash?
I would lean heavily towards no IPO, but then again, I'm not really a finance person.
Yeah.
To me, it's a bunch of common sense questions. Why does an organization IPO? If you want to raise capital, if you have a need for capital. Thankfully, we don't have a need for capital. And freedom and liberty is what really allows us to excel in what we do. And that's a big factor for me personally, the innovation that we do, the decisions that we take. So for me, unless, like Nikhil is saying, unless there's the pros and cons outweigh each other significantly, the flip, I'd heavily lean towards not.
Heavily lean towards not. Are you 50-50 or heavily leaning against not?
I mean, the only other reason, apart from the fact that we are stockbrokers, to list is if regulations ask us to list.
And you can catch that entire conversation with the Zerodha Try-On, our podcast, Young Turks Reloaded. It's coming soon, only on CNBC TV 18. And with that, it is time for us to wrap up this edition of Business 360. The news will continue right here on CNBC TV 18. Stay tuned. We're back in a moment with more.